This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor with NYU Grad on Wednesday, July 9th. Let's jump into today's dynamic markets. I'm being a little bit sarcastic here. It's right about 3:30 in New York, and the volume is really light. We're at 49 million shares traded on the SPYs on a daily average of 71. Why that's important is that the trend has been low volume up days or even overnight low volume up, and when volume comes back, things sell off. There's a lot of breakouts right now happening. I'm going to cover that today, but I would like to see more institutional oomph or support here, because when we've seen these type of rallies, even at these lofty levels, there's a high risk here of a fake out. And when you take a look at why we're rallying, not that it really matters the why, but a lot of it is headline rhetoric on rate cuts, the Fed minutes talking about rate cuts. And keep in mind, everyone is jockeying to be the next Fed chairman. So if you're trying to become the next Fed chairman, you're going to throw your hat in the ring by saying, I will appease the leader, whoever the president is, and I'm going to cut rates. So just keep that in mind. So let's cover a little bit of macro news before we jump in today. So there were some early morning tweets about basically Trump saying that the Fed is at least 3 percentage points too high, and that we need to cut like 300 basis points. And on the headline narrative, that seems like it would be great, right? Like to have mortgage rates go down 3 percentage points from wherever they are today of like 6.9%. And that's why housing stocks are up today. But historically, if you look at performance after a Fed pivot, it's not that good. It's usually means that the doo-doo has hit the fan and the Fed had to pivot to save markets. But hey, maybe this time will be different. I've also shared on the free show notes a lot of the home builder stocks that were up quite a bit. Nail, which is kind of a conglomeration of them, is up like 8.18%, a bullish housing ETF. Many names like Hovanian, Beazer Homes, DR Horton, they're up like 4 to 5% today. The other thing that I wanted to note, and I guess I have millions of listeners, I'm being sarcastic again, because I've been talking about sticking it to these deals and only buying this non-discretionary things that you were gonna buy anyway, like toilet paper, garbage bags, things like that. Amazon Prime Day, the first day's sales have fallen 41% from last year's numbers. Now, obviously, there's 3 days left, so we can, they can cut prices even more, right? And then they'll catch up to last year's performance, but we'll see. That's a developing story. Let's jump into the breadth numbers. So keep in mind this is 3:30 New York time. We had a pretty bullish skew to the breadth numbers. The only thing missing right now is volume or support, institutional oomph. We had 494 new highs on the NYSE versus 76 new lows, 64% advanced versus 33% declined. 23% are below its 50-day moving average, and 39% are below its 200-day moving average. All indices are up across the board. The Dow is up almost 0.5%. The NASDAQ is up 0.8%, and the S&P is up a little over 0.5% right now. Taking a quick look at the mega caps and Mag 7, the only one that's kind of struggling here in the back is Tesla, down 0.25%. Apple was down marginally here after being up pretty strong the other day, but Microsoft up 1.2, Nvidia up 1.8, Amazon 1.5, Alphabet 1.1, Meta 2.1. Taking a quick look at sectors, pretty much every sector is green except for energy and consumer defensive.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you, they connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.